Hello everyone. Good evening. My name is Vikas Agrawal, and I am the founder of AIF and PMS Experts India. We are one of the largest platform when it comes to investing in alternate space or portfolio management services in India. At AIF and PMS Experts India, we keep organizing these knowledge-based sessions, and if you want to see more, please visit www.aifpms.com, where you will get to see the series of the sessions that we organize, and we call it Ask the Expert Show. So with me I have Mr. Sandip Bansal from ASK Investment Managers. So firstly, thank you, and thank you so much for accepting our request and coming all the way from Bombay to Pune and agreed to do a session with us, Sandip.
No. Thank you so much, Vikas, for having me here, and it's a pleasure speaking to you and to everyone. So thanks a lot.
Thank you. So basically what we thought is, today we're going to talk about ASK Investment Manager.
Sure.
You are one of the largest portfolio managers in India in terms of AUM, in terms of your track record. So we thought we'll spend some time, but before that, let me have the privilege of introducing Sandip. So he brings about almost 18 to 20 years of experience. I would say 2 decades of experience when it comes to equity investing in India. And Mr. Sandip has just joined ASK about a year back, and before that he used to work for SBI Life Insurance as part of the investment team, heading the research division. And he is in IIM Ahmedabad, and he is also managing the funds out here. So संदीप जी, ये तो बहुत मुश्किल होगा कि पिछले आपके 20 साल के जो तजुर्बे को हम 20 मिनट में कवर कर सकें, but the idea is to sort of read your mind today, understand how do you operate, how do you function,
sure.
And also talk about the agenda of the discussion is of course to talk about your funds today,
Sure.
So I remember there is this perception in the markets that mutual fund has history more than PMS, but let me tell you, as far as regulation is concerned, this was 1993 when SEBI defined this PMS as an instrument, and post that in 1996 mutual fund started, SEBI started working on the mutual fund side. So if you look at PMS has almost 3 decades of history in India, and I remember during 2000 time there were 2 or 3 large players who got the license to start PMS, and ASK is one of them. So ASK has now almost 2 decades of track record when it comes to investing in portfolio management services. So the first scheme which was launched, I remember, was a growth fund. Now if I have to quantify in terms of numbers, then let me I'm glad to share that if you would have put a crore in 2001 when this scheme was started, growth fund, the valuation of that is close to 47 crores. So you imagine the kind of wealth ASK Investment Manager has created for the investor community as a whole, and those especially who's invested in the fund. So today we are here to talk to you about growth fund, and we are also talk to you about how growth fund, whether this fund is now coming under AIF platform, and they're launching the AIF with the same thought process. Of course, if there would be some changes, we'll discuss with Sandip today.
Sure.
So we'll talk about that. So Sandip ji, please tell us about your last 20 years of history of ASK Investment Manager, and also if you can talk to us about your investment philosophy, because how did you manage to deliver 20%, close to 20%, 19.5% CAGR for 20 long years?
No. Sure. Thank you so much, Vikas, once again. ASK is one of the oldest PMS houses in the country. Currently it is the largest as well. We have around 35,000 crores of assets under management. What has held us in good stead over the years is following one consistent philosophy. Our belief is that outsized wealth creation is possible only if we invest for the long term and in compounding opportunities. What we look at is businesses that deliver very good growth, have a very high return on capital, which basically defines the moat of the business, have a very large size of opportunity to cater to, have very strong management in terms of vision, execution capabilities, etc. And obviously we would like to buy businesses at a discount to the fair value. the growth PMS has delivered this return because we could actually implement this particular philosophy of ours. This fund specifically has a slightly larger focus on the size of the opportunity. So, what we essentially mean by the size of the opportunity is that our focus is more on the size of the pond rather than on the size of the fish. So, what we would want is a very large size of the pond and a very small fish, right? Our focus is not that much on the size of the fish. So, we do not believe that much in, let's say, market caps, large cap, small cap, mid cap. But what we want to focus on is a large runway for growth. The ASK Growth Fund has followed this philosophy. What we also do is we are not very high churn investors. Our churn ratios are low. We like to buy good businesses and we want to stick with those good businesses. We believe that a strong management, a large opportunity size, a high ROE creates magic on its own, and that has led to the wealth creation that has been seen in this fund.
Sure. So in last 20 years, Sandip ji, there were many growth funds or maybe opportunity funds. They started by various asset management houses, and eventually they had to shut down the PMS businesses, if you look at. But then when it comes to ASK, you have the longest history, strong track record, and more importantly, a very, very consistent track record. So when you don't have too much of churn, how did you manage to deliver these returns so consistently?
Sure. So Vikas, the reason for that is when we look at investments, we essentially do bottoms up investing. For us, the unit of investment is the corporate, its profitability, its cash flows. We as investors do not focus on the macros. We are not top-down investors, we are bottoms-up investors. So, the returns that this fund delivered that you said was done with a beta, which the market often uses of 0.8.
Which is even lower than some of the mutual funds in India today.
Yeah, and which is, let's say, lower than the market beta of 1. So it is often felt that higher risk leads to higher return. While in this particular fund the beta was lower while the returns have been higher. And this has been possible because we've invested in businesses that have high returns on capital, that have delivered high growth, that are free cash flow generating businesses, and that are essentially net cash businesses. So at the portfolio level, the portfolio is net cash, it does not have any debt. This is because the businesses that we invest in, they are such high return on capital generating businesses that they do not require external capital for growth. So this cash generating machine has enabled itself to compound, which has delivered the returns.
So how does this cash flow go back to the businesses, or how do you evaluate?
Sure. So the capital allocation decision of management is very essential for the capital efficiency of a particular business. So what we've seen historically is that businesses which are relatively asset light in nature, which do not require large pools of capital to grow, what they do is they, after investing whatever little capital that they need in the business, they actually return it back to the shareholders. So by nature, the kind of businesses that we like have been relatively asset light in nature, except maybe for the BFSI sector, which roughly comprises, let's say at today's point of time, around 1/4 of our portfolio. So BFSI by definition is a capital heavy business. But apart from that, the businesses that we generally like are asset light in nature. So whatever capital that they generate, they invest part of it in the business back, because these are high growth businesses as well. And then whatever remains, they kind of distribute it back to the shareholders.
Sure. So now point here is that, so you have now almost 2 decades of track record in terms of managing this fund, and now that your fund launching the same fund under the AIF platform. So we want to understand from investor point of view, how does it going to help the investor, and what's your next plan of action for next 5-7 years in this fund?
Sure. So, Vikas, maybe I'll take the second question first.
Sure.
Our plan of action, fortunately or unfortunately, is totally unchanged.
Okay.
It is what we've been doing for the last 20 years. We just continue to hope to follow the same. We are what one would like to describe as relatively boring investors. We believe that if we are able to behaviorally follow what we believe in and what our philosophy is, that itself is going to do the job. The difference between AIF and PMS is that AIF is a pooled money. PMS, the stocks actually come to the investors' individual demat accounts. So the structure of the fund, takes care of aspects like taxation, itself. So the individual does not need to worry about taxation separately.
Sure. So it is done at the instrument level as per the definition and regulation defined by the regulator.
Right. So that is the format. So that is one advantage that is there in the AIF platform. Obviously investors have the freedom and the choice to choose whatever platform they want to choose. AIF is essentially 5.5 year kind of a time frame, which is extendable by another 2 years, at the discretion of the investors. While in the PMS format, obviously, one can continue for let's say a longer period of time if one chooses to. So those I would say are the essential differences. Between the two.
So let me ask you another question with regards to the timing of the launch now. So in 20 years you did not launch this fund, and then after 20 years down the line you're launching. So you think it is a good time for the investor to look at growth funds, particularly in the AIF platform, or you see more bigger opportunities coming as India is in the verge of becoming $5 trillion economy?
So great question, Vikas, and thank you so much for asking this question. So what we believe is that investors with a long-term horizon, there is no better place to invest than India. So I would say that it has always been a good time to invest in India, and today is also a good time to invest in India. We as investors essentially do not believe in timing the markets. We do not believe that long-term wealth and consistent wealth creation is possible by timing the markets. Wealth is created by aligning oneself to strong businesses, businesses that have a long runway for growth, that have strong managements, and so that is our philosophy which we want to follow. Having said that, what has happened in the last few years is that a lot of reforms have taken place in the country, which we believe have accelerated the growth trajectory that the country can potentially have.
Correct.
Secondly, India is now orienting itself towards a larger manufacturing component of the GDP. Let's say we are currently at around 14% or so.
The contribution coming from manufacturing
to our GDP is around 14%. The government's intent is to take it to around 25%. So that provides a very strong growth in certain sectors of the economy. So we believe that investors can really benefit from that. All large economies that have transitioned from a low income country to a middle income country have had a manufacturing kind of a revolution as well. We believe that India's moment is there right now to do that. Plus, what has happened is that the youth in the country today is really far more connected this is a globalized world in which information is really exchanged very freely and in real time basis. The aspirational youth is kind of really expressing itself, and that is kind of increasing the demand as well as the willingness to work hard to fulfill one's desires. Sure. And now the economy also provides a various breadth of opportunities to actually undertake that work. So that is the other aspect one would like to say. So that
could have been the reason for you to think.
So just one more reason, Vikas, I would like to highlight that in terms of digitization, the work that has been done in this country is truly humongous. So we have the third best ecosystem in terms of unicorns in the country today, at 100 plus unicorns. And this itself is going to throw a lot of opportunities in the market going forward, because the market breadth is also going to become wider. We've seen many such companies actually getting listed, and we believe that many more such companies would get listed in the future as well. Obviously, when we would look at investing in them from our fund, our criteria and our philosophy frameworks would need to be met for us to do that.
Absolutely, So as you rightly said that, so 5.5 years, I mean, this is for the first time maybe in my career, I can see a lot of visibility and direction looks to be extremely clear, the way things are shaping up in India, especially post-COVID, and a lot of reforms taken by Modi government is now started showcasing the results. So that's a wonderful work. The other thing which I wanted to check is, so now after 5.5 years, investors will, the money, the fund will get mature, and or you have the extension there, you can extend.
Sure. So after let's say 5.5 years or so, because this fund has a drawdown in 3 tranches, so we do not call for all the money upfront. We call for the money in 3 tranches, let's say over a period of 9 months or so. Then we invest this money for a period of around 4.5 years. So let's say at the close of 5.5 years, the investor has the option to liquidate the money, or if a certain proportion of investors agree, then we invest this, we extend the tenure of this fund for another 2 years. So then it kind of becomes a 7.5 year kind of an opportunity. Investors can obviously withdraw the money before as well, if they wish to, with certain exit charges which are there. The other thing is, so you had in last 6 months particularly, initially you came out with golden decade opportunity, then emerging opportunity, and this growth now. So what we wanted to understand is how different it is, especially the golden decade, because that is also for the long term, and the one that you are launching now. Sure. So again a very good question, Vikas. So
because the investors keep asking these questions to us, and there are a lot of investors who could not participate in golden decade because you got more than thousands investors and the fund had to close earlier than they expected. So it is for them to understand.
Sure. So we at ASK believe that there is just one philosophy by which wealth creation can happen, which is a long-term compounding. So our philosophy across various funds is actually the same, and there is absolutely no change. Obviously, there are funds which could have some specific angles, some specific themes which are more emphasized versus other funds. So let's say the Golden Decade Fund. The Golden Decade Fund focuses on transformational opportunities that are coming up in the economy. So it wants to leverage the value migration that is happening in the economy and tries to identify those stocks and invest in them. The Growth India Fund, which we are launching now, is actually a superset fund, which is a generic ASK philosophy fund. It's a broad brush fund, and there are no specific themes, angles, etc. attached to it. The fund manager has the flexibility to choose any area of investment which kind of meets our criteria of a minimum return of capital of 25%, a minimum earnings growth of 15%, and kind of invest in that.
Okay, okay. So it's a broad-based funds, and you really don't have too many angles to look at. So what you're looking at is a large opportunities with the growth mindset, and then you criteria that you talked about. So it'll give you broader pictures. It's more like a flagship product, I would say, wherein it'll give you a complete. Through this fund you can participate in Indian growth story to large extent, I would say, and not particularly on those sectors. So that is a good thing to look at. So, so is this fund launched now, or you are launching? I mean, can the investors start participating now?
Yes. So this fund is actually in a way started today. So obviously there is some time period in terms of filling out forms, doing the formalities and all of that, and then investors can definitely participate in this.
All right. So couple of questions very quickly. So let's say something happens and the client wants to exit immediately. They are allowed to exit with some exit loss, right?
Yes, yes. So investors obviously can exit at any point of time with certain exit charges. I think the exit charges, there's a slab-wise exit charges which reduce on a per annum basis. I think they start from a 5% kind of level and go down to 1%. And after certain years, obviously there are no exit charges. Yeah.
Second is, you take cash call or you don't take cash call?
Great question again, Vikas. We as fund managers believe that whatever money you give to us, we invest that money completely in the markets. We do not take cash calls at all. Cash calls, if any, have to be taken at the investor end. Obviously, there could, Vikas, be some timing difference in terms of receiving the money and deploying the money. So, that I think is more of an execution difference rather than a cash call.
The other thing is, so you want to call complete drawdown in one go or maybe in 3 times?
No.
What would you prefer?
Sure. What we do is we kind of stagger the investments over a period of 9 months. We call for investments every 3 months or so. What happens in this is that the money that is coming from the investors is also kind of staggered. They can also plan their cash flows better. Sometimes investors do not want to give their money all at one time. This kind of helps them in planning that. The money will come and get invested over a period of time.
All right, so it was great interacting with you. Thank you so much for giving us your valuable time, and thank you investors for watching this show, and we promise you that we keep organizing these knowledge based sessions again and again, and please watch the space. Thank you.
Thank you so much, Vikas, for having me. It was a pleasure speaking to you. It was a pleasure speaking to all your clients and all the investors, and happy investing.
Yeah, thank you.
Thank you.